What if the First World War wasn't just a clash of empires, but the ultimate showdown between bank accounts? We're taught that World War I began with politics, alliances, and a single gunshot in Sarajevo. But what if the real spark came from something far less visible and far more powerful? Behind every soldier, every bullet, and every empire was an invisible force: money. The financial systems that built prosperity also built the machinery of war. And when those systems cracked, the world fell apart. This is the untold story of how finance didn't just fund the Great War, it forged it. Setting the stage, the year is 1900. The world seems more connected than ever. Steamships and telegraphs tie continents together. Banks from London to Berlin to New York move capital across oceans in seconds. At the heart of it all stands the gold standard, a promise that every major currency can be exchanged for gold. It's the foundation of trust in the global economy. And Britain, the empire on which the sun never sets, controls most of that gold. But not everyone is content. Germany, newly unified and booming with industry, wants its own empire, not just of colonies, but of credit. France is rebuilding its wealth. Russia is desperate for loans. And the United States is rising as an industrial giant. It's an era of peace built on financial competition, a peace so profitable, no one realizes how fragile it is. Origins: Germany's rapid industrial growth threatens Britain's financial dominance. Its exports surge, its banks expand, and its leaders dream of an empire to rival London's control of global trade. To break free from British influence, Germany begins investing in new trade routes, like the Berlin to Baghdad Railway, a project that would give it direct access to Middle Eastern oil and bypass British-controlled seas. In London, the move is seen as a financial threat disguised as engineering. Economic rivalry intensifies. Meanwhile, each empire arms itself militarily and financially. Governments issue bonds, borrow from private banks, and stockpile gold. The system is straining under the weight of competition, but no one dares stop it. The rise. By 1914, the great powers are locked in a delicate balance. Every nation owes another money, every economy depends on trade, and every currency is tied to gold. Then, a single event, the assassination of Archduke Franz Ferdinand, shatters the illusion of stability. Within weeks, the financial machinery of the world seizes up. Investors panic, gold reserves vanish across Europe. Banks shut their doors. To survive, nations abandon the gold standard and begin printing money. The war begins not just on the battlefield, but in the markets. Britain turns to its colonies and to American financiers like J.P. Morgan and Co., borrowing billions to keep the war going. Germany, blockaded and isolated, prints marks by the billions. Inflation becomes its secret enemy. Breaking point: as the years drag on, the cost of war explodes. Industrial production turns entirely to weapons, and governments live on borrowed money. By 1917, Britain is nearly bankrupt. The United States, now the world's creditor, enters the war, both to defend democracy and to protect the billions lent to the Allies. When the fighting stops in 1918, Europe is shattered. The victors are buried under mountains of debt. The losers crushed by impossible reparations. The empire of money had fueled the war, and now it demanded payment. Fallout and failed fixes. In the 1920s, the world tries to rebuild the financial order. Britain returns to the gold standard. Germany's economy collapses into hyperinflation. France and the US fight over debts and reparations. What follows is a cycle of boom and bust, short-lived recovery, followed by the crash of 1929 and the Great Depression. The financial instability of the post-war years wasn't an accident. It was the inevitable consequence of a global system built on debt, pride, and unequal power. The First World War didn't just end an era, it bankrupted one. Modern parallels. Today, we live in another empire of money. The gold standard is gone, replaced by digital currencies and central bank debt. In 1914, the world's total debt equaled about 120% of global GDP. Today, it's over 330%. The same pattern repeats. Nations borrowing beyond their means, competing for financial dominance, and hoping the system holds. Trade wars, sanctions, and currency manipulation echo the tensions of the early 20th century. The players are different, but the script feels eerily familiar. Conclusion: 3 takeaways. Money doesn't just fund wars, it shapes why they happen. Financial power often determines who wins or loses long before the first shot is fired. When economies compete without balance, conflict becomes inevitable. The First World War was a war made not just by men, but by money. And as the world faces its own financial rivalries today, we must ask, have we learned anything from the last empire of money, or are we simply writing its sequel? If this story made you think differently about history, subscribe for more deep dives into the hidden forces that move our world. Because sometimes, the most powerful weapons are the ones we can't see.